Good afternoon. I am Professor Lambeau on YouTube. I'm going to be giving you this presentation on the United States budget and the corporate tax problem. This is an old man. All you really need to know here is that I'm setting up to tell you the many types of taxes the United States has. For starters, the United States has sales tax, personal income tax, corporate income tax, Social Security tax, the Medicare tax, state tax, also known as the death tax, capital gains tax, dividends tax, luxury tax, excise tax, payroll tax, property tax, sin tax, and value added tax. Now, the big two that I'm going to be talking about are personal income tax and corporate income tax. So, what is personal income tax? Personal income tax is taxes on revenue that you make from your job. It is your personal income. If you own your own business, it's income from that as well. So there are two types. You have federal and you have state. So federal, there's this general misconception that if you make a certain amount of money, all of your money is taxed at the same rate. And if you get a raise, you're going to be in a higher tax bracket, and that is going to make you actually make less money. That is wrong. It's a misconception. So let's say in this example that you make $80,000 a year. As you can see on this chart here on the left side of the screen, that first $9,875 is going to be taxed at that 10%. That next $40,125 is taxed at 12%. And then the remaining $30,000 of your 80 is taxed at 22%. So making more money is not going to put you in a higher tax bracket and make you actually lose money. That's not going to happen. State tax is taxed in the same way, except the amounts vary by state. So many states have 0% personal income tax, and two states that have the largest are New York and Oregon, who have a personal income tax rate of 14.78 and 14.69 respectively. The corporate income tax is very similar to personal income tax, except it's taxes on the income that corporations make. So the resident U.S. corporation tax rate is a flat 21%, which was lowered from 35% in 2017. In addition to that, there's a second layer, which is taxes on dividends and capital gains. So qualifying dividends and long-term capital gains are taxed at 23.8%. Those qualifying dividends are payment to owners of stock shares that meet the IRS criteria for taxations at the capital gains tax rate. And those long-term capital gains are assets that are held for longer than 1 year. So then those non-qualifying dividends and short-term capital gains, which are just the opposite, those are taxed as ordinary income at that flat 21%. So you can see here in this graph the corporate income tax revenue, which peaked right around 7% in the 1940s, and now it's down, well, in 2019 it was down to 1.1%. So corporations are paying significantly less taxes as they were pretty much ever in the past. This graph shows from October 1st, 2022 to January 31st, 2023, where the U.S. government has gotten its income thus far. So as you can see, individual income tax is the largest, followed by Social Security, Medicare, and then that third largest is corporate income tax. But as you can see, that individual income tax is huge, and it is much, much bigger than the corporate income tax. I'd spell it out right here for you. It's individual income tax is 52%, or $767 trillion. That is just Joe and Jane taxpayer living paycheck to paycheck, trying to save for medical bills and school and things like that. And then corporate income tax, which have like real world revenue of billions and trillions of dollars. These corporations are only paying 9%. which is 126 trillion. Still a large number, but not anywhere near that 767 trillion that Joe and Jane taxpayer are paying. So corporations that avoid taxes, there are a lot of them. You could say basically every single one. A few examples for you. Amazon paid 5.1% income tax from 2018 to 2021. Now let's keep in mind they're supposed to be paying that flat 21%. So that 5% is pretty far away. 2020, a lot of companies actually received tax breaks and didn't actually pay any money. So all of these that I've listed here are the ones that received money from Joe and Jane taxpayer that we paid them out of pocket and they paid nothing. These are some of the biggest companies in the United States. I didn't even list them all. There's 49 more here that I didn't list. Then moving forward to 2021, AT&T once again received money back, and the highest one on here is UPS down at the bottom, paid 9.9%, which is still not even half of that 21% that they're supposed to be paying every single year. They do it. They'll offshore their profits. So what these corporations will do, they'll use foreign companies owned by the parent company to launder their profits. So what they'll do is, let's say Nike starts a Nike business in Ireland or Jamaica, and all that business really is a piece of paper in a filing cabinet that says this company is real and it exists. And that's all that company is. It's no workers, no office building, nothing. So they'll use the foreign tax laws. Let's say they'll use Ireland or Jamaica's or Norway, Sweden's. They'll use someone else's tax laws so they can avoid the United States tax laws. And then they'll use different accounting rules to report to their shareholders and the IRS. So with their shareholders, they'll report record profits and everything will look good. And that's the truth. That's honestly where they're at. They're making all kinds of money and they have no problem doing it. And then for the IRS, they say that they have no money and they spent it all, and they'll use different accounting rules for both. And this is legal. They're allowed to do this. If they report no income, they don't have to pay any taxes. And then they'll use tax breaks and accelerated depreciation. Tax breaks can come in many different forms. Just to get into a few of them, research and development. You might think this is like Ford developing a new car or Apple making a new phone. No, this could be Burger King making stronger bags to hold hamburgers in or something. Any type of research and development, they can write it off on their taxes. Salary and bonuses. They'll give salary and bonuses to their CEOs, CFOs, their high-ranking managers, and then they'll write those off on their taxes. Charity write-offs. They'll give to charity, which is great, and then they'll write it off on taxes. Often they'll only give to charity so that they can write it off. And oftentimes these charities are owned by the parent company, they're owned by the CEO, something like that. So it works out even better for these shareholders and stakeholders. They'll give medical premium write-offs. They'll do write-offs for investments. So let's say UPS buys a $100,000 truck. They'll write off $100,000 on their taxes instead of writing off $10,000 for 10 years. And then they'll give stock tax write-offs. So that CEO, CFO, those high-ranking managers, they'll gift them stocks, and then they'll write those stocks off on their tax. So individuals do the same thing. So the individuals, your Warren Buffett, your Jeff Bezos, most of the wealth that they have is not liquid. It's held in stocks and it's held in real estate, and that's not taxed until it's sold. So no taxes on those. They don't have to worry about it. The individuals will also live off loans. So Elon Musk is really popular for this. Elon Musk would borrow money against the stocks that he owned in his company, and then he would live off those loans. And those loans are not taxed because they're not considered income. So he wouldn't have to pay any taxes. And then they would donate to charity, whether or not they own it or not. They would donate to charities as well, so they can avoid paying taxes. There's one more that I don't remember what it is, but it's probably not even important how they get around paying tax. So in conclusion, the U.S. has a lot of different types of taxes. And corporations and wealthy, they do not pay their fair share, but we all knew that already. So this costs the U.S. us $123 trillion every single year. That's Joe and Jane taxpayer. we're not getting that money back. That money's not going to our schools. It's not going to improve our roads or our libraries or anything. So what could we use that money for? We could use $123 trillion to house all the homeless people in the United States 15 times. We could replace every lead pipe in the United States twice. We could provide free breakfast and lunch to every student from preschool to 12th grade for 345 days a year. And we could also build one Northrop Grumman B-2 Spirit and have about 120 trillion left over. That's a cool plane. Anyway, what can we do about this? What can we do about these individuals, these corporations not paying the taxes that they're supposed to? We can vote. We can vote people in to change these laws that are allowing these corporations and these ultra wealthy to avoid paying taxes. That's the first thing we can do. We can also protest. So we can go to our Congress, we can go to our senators, we can say this is messed up. We don't want this to happen anymore. Like, you need to fix it. This is a problem. We're losing out on this money. We're paying more money than these corporations that are taking advantage of us every single day. Staying informed is super important. Watching videos like this, watching other YouTubers, and actually reading articles and the laws that come out so we can understand what's happening in our country. You can't stress it enough. It is super, super, super important. And the last one, become a system. I know it sounds crazy to think that we could be senators and congressmen and House of Representatives and all this stuff. But we can be. We can become a system, and we can enact the changes that we want to see. We can stop corporations from doing this. It doesn't even have to be those high-ranking officials. Okay, as long as you can be in a lower level somewhere in the Congress or House, and you can help the system change. In any case, I am Professor Lambeau on YouTube. Please like and subscribe. Thank you for listening.